Small cap stocks, that is Nifty Smallcap 250 index, has fallen by 18% year to date, that is in less than 2 months. For those who don't know, Nifty Smallcap 250 index represents 250 companies. The companies ranked 251 to 500 in terms of their market capitalization. That is the size of the companies. So what about investors' favorite, the largest small cap mutual fund? Nippon India Small Cap Fund, managing assets worth over 57,000 crore. Is it worth investing right now in fallen markets in it? Does it make sense to go for SIP in the 5th largest actively managed fund? Well, in this video, we are going to talk about certain things about the fund that will help you decide if you should invest or avoid investing in Nippon India Small Cap Fund. Hello and welcome to our channel 5 Minute Finance by ET Money, where we discuss the basics of investing and personal finance. So we'll start with understanding the fund better. Nippon India Small Cap Fund was launched in September 2010. It has been managed by industry veteran Samir Raj since 2017 and is the biggest fund in the small cap space and the 5th largest across actively managed equity funds, holding assets worth more than 57,000 crore. In just a year, the fund has garnered impressive inflows from investors. A year back, the fund was managing assets worth 45,894 crores. As far as performance is concerned, it has delivered 11.24% in the past 1 year, outperforming its benchmark 5.89% but slightly trailing the category on an average 11.88%. But if we look at the 5-year data, the fund has grown by a CAGR of 29.74% and by 20.50% in the last 10 years, both well above the benchmark and category averages. Well, now while trailing returns can be a good starting point, they are a lot dependent on the current market conditions. So that is where rolling returns come into picture. Rolling returns tell us how consistently the fund has performed over time. Rolling returns basically is an average of how the fund has performed across different market conditions and market cycles, not just a single point in time. And if you want to understand rolling returns in detail, you may watch our other video. The link is in the description below. Okay. Coming back to the rolling returns. So as you can see, looking at 7-year rolling returns over the last decade, the Nippon India Small Cap Fund has delivered an impressive average return of 22.63%, far ahead of the category average of 18.55% and the small cap index Nifty Smallcap 250 at 14.47%. So while short-term fluctuations are common, the fund's strong long-term performance speaks for itself. It has consistently outpaced its benchmark, proving its ability to generate wealth over time. Next, let's quickly look at how this fund has performed for systematic investors, that is, those who have been investing in it via SIPs. So on your screen is how a 10,000 rupees monthly SIP in this fund has performed over the last 10 years. Your total investment of 12 lakh would have grown to 44.38 lakh rupees, delivering an impressive XIRR of 24.67%. Now for comparison, the same SIP in the small cap index Nifty Smallcap 250 TRI would have grown to a lower sum of about 32 lakhs with a lower XIRR of 18.62%. This clearly shows that the fund has significantly outperformed its benchmark in wealth creation. This data highlights the power of long-term SIPs in small cap funds, with the Nippon India Small Cap Fund generating far superior returns than the benchmark over the decade. So, well, the performance of the fund no doubt is amazing, but does that mean you should invest in this fund? Well, before we move further to know some more unique facts about Nippon India Small Cap Fund, let me be very clear. Small cap funds are very risky. They invest in small companies, which make them suitable only for sophisticated investors who understand the risk involved in these funds. So go for these funds only and only if you understand the risk well. All right. So returns, as we saw, are great, but what about how the fund has performed when the broader markets were down? Small cap funds can be volatile, but the real question is, does this fund hold up better when markets stumble? Over the past 10 years, the Nifty Smallcap 250 index has seen 13 quarters of negative returns. The Nippon India Small Cap Fund has outperformed in 12 of those 13 quarters, proving its ability to cushion losses better than the broader small cap market. Take March 2020, COVID crash for instance. While the Nifty Small Cap 250 plunged 33.7%, the fund fell lower 29.65%, offering better downside protection than the index. The same pattern held in 2018 and 2019 corrections, where the fund consistently declined lesser than the index. So no doubt, the fund has shown better performance during the down market as compared to the index, which is a good thing. But here again, as you can see, the downfall in the fund may not be comfortable for you if you are a new investor or you don't understand the risks of small caps. So make your decision as per your risk appetite. Okay. Now that we have seen the fund's performance over the years, let's dig deeper. What's driving its strong returns? So to know that, let's look at how the fund manager invests investors' money. Over the past 5 years, the Nippon India Small Cap Fund has maintained a higher allocation to large and mid cap stocks compared to most other small cap funds. As of January 2025, it holds 11.55% in large caps versus 7.88% category average and 14.85% in mid caps versus 12.71% category average. This suggests a slightly more balanced approach, reducing risk while still focusing on high growth small cap opportunities. Meanwhile, its small cap allocation is slightly lower than the category average at 68.53% versus 73.5%. This cautious tilt means the fund adds some stability through large and mid cap exposure. By spreading its investments across market caps, the fund manages risk better than many other small cap funds, aiming to deliver high growth with some downside protection among its small cap peers. Now, if you look at the number of stocks in the fund have nearly doubled from 118 in January 2021 to 233 in January 2025. This expansion could largely be due to funds growing AUM, which allows it to spread investments across more stocks. But despite this large portfolio, each stock's allocation remains low. For instance, HDFC Bank, its current highest holding, has an allocation of less than 2%. This means no single stock dominates the portfolio, reducing risk compared to funds that take concentrated bets. The fund also actively manages its portfolio, frequently adjusting stock allocations. Take Deepak Nitrite and Credit Access Grameen for example. These stocks had top allocations in 2021-22 but now make up less than 0.5% of the portfolio. This indicates that the fund trims holdings when a stock reaches its valuation target or if better opportunities emerge. This shows that the fund does not rely on a few big bets. It spreads risk across a large number of stocks while constantly adapting to market conditions. And it's a wrap. The whole idea of this video was to give you enough information to know Nippon India Small Cap Fund better and to decide for yourself if this fund is suitable for you or not. Drop in any questions in the comment section and happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.